Hello and welcome to week 5 lecture. Before we start the content of week 5 lecture, I want to touch upon two topics we missed in week 4. One is about the social entrepreneurship and the other one is about the family-based business. We'll start with the social entrepreneurship first. See, social entrepreneurship, a person who establishes enterprise primarily to meet social objectives. So that's how they differentiate themselves from an entrepreneur. So they have some social objective and they want to meet it. Now, so just to give you an example, again going to Dr. Muhammad Yunus, the Nobel Prize winner. Now, he found a lot of children in Bangladesh had night blindness, which means they can't see after 5 or 6 in the evening. And when he looked into the reason why it happened, now it was found that they don't eat enough vegetables, because it's a developing country and things like that are very challenged. And then he started to think about how you can solve the problem. And the only way to do is to give seeds of the vegetable plants for very less price to all these people. So he started this project, say 15, 20 years back, and then it became a huge success there. People buy that and then they plant in their own backyard and they're starting to eat vegetables. And today in Bangladesh, there is nothing known as night blindness with any children. So you have a number of examples like that. Now, how to become a social entrepreneurship? Now, what steps you need to take? So I have posted 3 different videos for you in the flow. I would strongly encourage you to do that. At the same time, you may also consider your feasibility study if you have anything in social context, which is a good thing. So you would see a component of social change there. So they would try to organize appropriate resources to solve societal problems. And they are more like an entrepreneurial managers. They apply business principles to non-profit organizations and NGOs. So why you need to apply the business principles to non-profit organizations? For a number of reasons. Even though they're not looking for profit, these organizations are looking to increase the membership. These organizations are definitely looking to increase their funding. They're competing for their funding with the government. They're competing for recognition with corporates. Because if you look into the corporates, there are corporates which the big corporations, they support certain non-profit organizations and charitable organizations, by which they get a lot of benefit. So these are some of the basic qualities of social entrepreneurs. So what are the criteria? So these are some of the criteria I have listed here today for you. Now, if you look into it, so they have a clear social or environmental mission set out in governing documents. So this is something is very, very important. So they make sure that they have this clarity and it is clearly stated in the mission. Generate majority of the income through trade. So they try to majority of the income through trade, reinvest majority of profits. So this is very interesting. So what they try to do is whatever they have earned, so they reinvest into the business itself. They want to develop the business. So that is very important. And the final one is very interesting. They be accountable and transparent. So this is very, very important because if you look into social entrepreneurship, you're trying to solve the problems of the society. So you need to be as much as transparent you need to be, which is very important. So these are some of the criteria for social entrepreneurship. So it exactly works the same. If you look into it, how the idea has been formed, you need to be creative, which is leading to innovation, and that in a particular innovation then leads to the entrepreneurship, right? So you have this idea which has been converted into a product or services, and then what you do is, so you create a value in the marketplace. But in the social entrepreneurship, the focus is on social need than the business need. So that is what makes really difference here. Right. Let's look at it now. How easy is it to start up a social enterprise? Now, so or put it on the other way, what are the challenges? Now, if you want to start a social enterprise, so there are a few challenges. One, establishment. Just to establish itself, now say for instance, for you to get the clarity of what you want to do, no, having a mission statement. So that's very important. Number two, in terms of when I say number two, within the establishment, it's about satisfying all the stakeholders. Now, say for instance, you want to create a product, no, which is biodegradable, okay, and so you have different stakeholders in terms of creating that particular product. Now let's say it's a packaging material, so in that aspect, now you need to have few engineers, you need to have scientists, you need to have the green support people, in terms of environment. There might be other interest bodies, customers. So there are different people. You need to satisfy all these stakeholders. Okay, and when you want to start a social enterprise, the problem again rises is about the funding. Okay, so it becomes a challenge because you are exactly not in the business of profit making, and the issue of governance could be as well as a problem. Number two, it's about the growth. Um, you may have to change the product and service as it grows. So that is something very, very important. You need to be very professional. And social entrepreneurs definitely need to create leadership skills. So as you grow, then obviously from a small, you're moving up to the large. So it is very, very important. And number three is managing succession. So how you are going to manage? So if you're going to do this, who is going to be the next person you're going to give it? Because the person should also have the same motive as the person who started for that social cause. So it's not going to be something you can't do it, but again, it's a challenge. So what factors influence the rise of the social causes basically? Now, number one is about increasing awareness, of the existence of social change entrepreneurs. So there are a number of people coming up, especially who's interested in the context of society. They want to change. They want to bring this change. So that awareness has been increasing, and increasing emphasis in society on most cost-effective use of welfare and charitable funds. That's another important aspect. And increasing levels of business education among managers. So this is another thing as well. So business education has been playing a huge role, especially in today's context. Students like you understanding what is entrepreneurship, so what is the importance of society. It's not about only this particular topic. There might be other topics you will be doing about sustainability, business ethics, and having this stakeholder approach. So all those kind of things really facilitates the influence of or the rise of social entrepreneurship. Okay, so before we get into the next topic, we would look at quickly what is the difference between the social and business entrepreneurship quickly. So one is about limited business skills. Sometimes social entrepreneurs might have very limited business skills. Say for instance, in terms of the different functions of business. That's number one. Number two is about difficulty in accessing venture capital. So if you want to really get money from the venture capitalists, in the week one I was talking about or encouraging you to see the TV show Shark Tank. Places like that, it's going to be quite difficult for you to access the venture capital. And number three is about organizational constraints. So when we talk about organizational constraints, it's more about managing. It's about the different functions of organization. The planning, the organizing, the directing, and the controlling. So those kind of things played a huge role in terms of social and business enterprise. That makes a big difference as such. Okay, let's look at the next topic, the nature and extent of family business. So, in the first lecture, some of you shared that no, you do have a family business and you would be definitely able to relate it to this particular topic. So, how do you define a family business? A business in which the role of family in determining vision and control mechanism leading to the creation of unique and resources and capabilities is dominant. So if you look into it, the major underlying factor is the role of family. Now, the entire family plays a role in terms of the vision and the control mechanism that creates a unique resources and capability which is dominant among the business. And if you look into it, the economic significance of family business, no, so they are not only limited to small firms. That's something you need to really understand. So it's not, when we say family business, it's not about always small businesses. There are now big corporations which has been run as family business. And 40% of publicly listed firms in major European economies are family controlled. Now, that's very interesting fact. And founding families control 33% of US largest 500 companies. And they may also account 90% of all businesses worldwide. No? And specifically in Australia, they account for 70% of the overall business, no? Which is very interesting statistics. So how do they differ from other businesses? No? Number one is about the management, no? Their objectives and decision making. So they kind of differ from the normal business. So which is very, very important. And number two is about employing family members and orientation to long-term gains. No? So if you look into it, the business would be mostly taken care by of the family members. No? And number three is about the performance. No? So is it, this is really a question, no, better or worse than non-family business? So how you are going to evaluate the performance of your own family? So which just brings in a lot of challenge here within the family business. So aspects of family business activity associated with the founder. No? So the founder plays a very important role, and if you look into it in terms of culture, they play an important role in terms of performance. No, period of time in the business is very, very important. No, and now the founder, the center part of the business is going to be the founder. Now, if you look into big corporations, now say for example, Apple, the innovative culture of Apple comes from the founder. Now, say the innovative culture of big companies. Now, if you look into it, it's basically from the founder. The founder plays a huge role in terms of their culture. The efficiency of participative founders is also important, and also the stage of life of the business. Now, again, you need to look into what stage. Are they in the growth stage, or are they in the maturity stage? So those kind of aspects are very important as well. Another important challenge with the family business is about now how to involve the next generation. No, is it going to enhance the performance? No, and how you're going to choose it? No, how you're going to pursue your career in family business? Some of you having your own family business. Now, the question to you is, no, are you going to be involved in the family business after your graduation? So there are so many thoughts around it, and this is a very interesting topic, especially in the wine industry, because wine industry is a male-dominated industry, and if you look into it, it's been happens from one generation to another generation, and there has been a huge shift in those industries basically. So another important challenge, and before we close the week 4 lecture, especially in the context of family business, is about the internal source of conflict. So how are you going to manage it? So you are a family, you're running the business, and then there is a small conversation, or there is a small disagreement at home on certain thing, and then you come to the business. How are you going to deal with it? So first thing is you need to understand the nature of conflict. So is it professional or personal? You need to split that. Okay, and there is always a benefit of conflict. Now, if it is going to be professional, if it is about the business, there is always a benefit of conflict in promoting, that leads to in promoting creativity and innovation. But how you can overcome the conflict management? There are two strategies. One is being collaborative, work in a very collaborative manner, or you compromise. So those are the two ways of doing it. So I'm going to stop here with the week 4 lecture, and then we'll get into the week 5 lecture now. Week 5. Okay. So this week we are going to look into the opportunities for going into business. Now the market research and strategy formulation. So these are three important topics if you look into it now. So how do you get the opportunities to do the business? Number one. Number two is about the market research. So the market research is something you guys are going to do for your feasibility study. Especially you will be doing that during your mid-semester working break. So you have an idea, you're converting that, and then you're going to do some market research and understand whether it's going to be feasible or not. And the final one is the strategy formulation. So how can you formulate a strategy, right? So this strategy, some of you have already done my topic, strategic management. Some of you might be doing in the next semester or the following year. So this is a topic by itself. However, in this lecture, I'm going to orient you about what is strategy and what are the aspects you need to look into it. So we have moved from the phase 1 to phase 2 now. So we are into the getting into the business now. So that is where we are going to look into all these topics. And this comes from chapter 6 and 7. And these are some of the learning objectives we are going to look at it. And I'm not going to go all through it, but if you look into it, it purely covers everything in the context of the topic we are going to do for week 5. Right. See, entering into a business is a very time-consuming activity. So now you have to spend a lot of time to do that. And the decision should be based on the advantages and the disadvantages. So there are too many options available in the market. Sometimes it's really beneficial for you to buy than just opening something totally new. Okay, so you need to keep that in mind as well. So when you consider into getting into a business, so there are 3 issues which you need to really consider. So the first thing is going to be, what is your personal goal and abilities as an owner or an entrepreneur? You need to really consider. So that is number 1. Number 2 is about what resources are available to the business owner. So it's about the time, it's about the money, it's about the staff. You need to look into it. So, and number 3 is about what is the nature of the business opportunity, right? So that is something you need to look into as well. So these are some 3 things. That's about the goals, the resources, and the business opportunity. So if you need to really look into 3, before you're getting into a business. So the next step is, I'm going to show you a flow chart which explains the relationship a little more in detail. So if you look into it, there is this opportunity, and then you have the owner or the entrepreneur, and then the resources. So if you have all this, there is a fit and gaps are here. But if you look into around, it's all about uncertainty. There is a lot of uncertainties is around there. Let's look into one after the other. Now first let us look at to the entrepreneur. So for the first step, a personal self-awareness is very, very important. What is your strengths? What is your difficulties? That's number 1. You need to also understand understand your prior knowledge. You need to know your prior knowledge. What will need to be successful if you want to enter into a business? What do you know, basically? Now, if you want to start something related to garments, then do you know about garments? Garment industry. Do you have work experience? All those kind of things. And number 3 is about should know. You should definitely know why are they going, what they want to achieve. where you want to really go and what you want to achieve. Now, and you need to also look into the personal risk. Now, what kind of risk is going to happen if you're going to get into this particular business? Okay, then next we will move on to the resources. Now, if you look into resources, the first thing is about the finance, the entry cost. Now, the money involved with starting a new business. Now, how much it's going to be, and at the same time, what is the money involved in terms of liquidating? Now, if you want to sell everything and go off, how much it's going to cost? Generally, they say it is really low in service industry compared to the manufacturing industry because the investment in terms of machinery and other things are going to be low. So number one, you look into finance. Number two, it's about the supply of labor. Now, do you have people to do it? So if you want to start something and you need to have something very specialized skill, you need to really think about it. Do we have them? No? And if you have them, what kind of training you're going to give? So what is going to be motivation and things like that? And number three, the most important resource I would say would be the time. No? Short term versus the long term. What are the aspects you can achieve in short term? What are the aspects you can achieve in long term? So these two things, you need to look at it in terms of time. Opportunity, the final one, we look into the opportunity. No, it totally depends upon, it puts in certain constraint on the types of business you're going to choose, definitely. No, so if it's going to be a new idea, no, then it could be a startup. If it is an existing family business, maybe they're looking in terms of transferring to it. Now, if you really want to get into a fast food chain, possibly you're looking at franchising something. So these kind of things you have to look at it. So these are three important issues you need to really consider before going into the business. Now, I'll repeat it again. One is about the owner or the entrepreneur. The second is about the resources in terms of finance, human, and time. And third is about the opportunity, so which you need to really look into as very, very important. Okay, so there are three ways of doing it. Now, going into business, one is you launch something new. Now, it's a startup. So that's number one of doing. Number two is purchase an existing firm, right? So there is this firm and you want to go and purchase it. That's an easy way of doing it. And the third one is entering a franchisee agreement, which is also a possible way of doing it as such. But there are certain advantages and disadvantages. Say for instance, question of flexibility. So if you're going to start yourself, you would have more flexibility in the way what you want to do. If you're going to take up a franchisee, obviously there is less flexibility because you're only franchising. The idea and the concepts and everything has been already existing there, and you cannot make changes to it. So which is very, very important. At the same time, there are also certain other aspects you would consider is about the rising capital. So if it's going to be a franchisee, you have some money, it is very easy for you to go to a bank and convince them or ask for a loan because they know that it's a franchise business. There is a business model is there. So those aspects are sometimes it's easy, but it's going to be difficult in terms of startup, which you need to really look into in the future. So if you decide to start up, there are typically few outlays for startup venture. Okay, so a lot of things here is about cost and expertise basically. Now, I'm not going to touch upon everything, but I'm going to touch upon a few things. So the most important thing is about the working capital. Especially if you're starting a service firm, working capital is very, very important. It's not difficult to start a business. You need some kind of investment. You may need a building, and then you start your business. Say for example, we can take an example of a simple cafe. It's not difficult. All you need to do is the coffee making machine and few other things. But the question is about sustaining that business. You need to have the working capital. You need to have money to run it. because a lot of in service industry, a lot of businesses are purely based on word of mouth. Of course, location makes a big difference, but it's also about word of mouth. No, it takes time. When an owner does not have enough working capital, no, working capital is the fund for a normal day-to-day operation. Then obviously what happens is the person has to compromise on the quality, and ultimately they lose the customers. The most another important aspect is about the staff recruitment. I touched upon in the when we discussed about the model. So where you're going to recruit people. Now, are you going to select someone from the local? What it depends on what expertise you're looking for. So that's another aspect. And number three is about the raw materials. Now, the most important thing I'm talking about. What is the raw material to start something, the business you want to start? So that is something you need to really look into it. Now, what is the raw material? Can you procure from the place where you are, or you need to get it somewhere outside? So that's important. But however, there are ways you can reduce the startup cost. No, one way of doing is home-based startups. No, can be an option. So which means you just start things at your home. Now, a lot of successful businesses being started in garage. No, they set up a small office in the garage, and then they start working on it, and they have built them into empires. However, no, if it is a technology-based business, all you need is the NBN, and a laptop, and then you start working on it. See, there are a lot of benefits in terms of starting up at home, but there are also some challenges you need to consider. And see, I'll highlight the challenges. Say, for example, you need to meet clients, and if the clients you have to meet them at home, it doesn't look very professional. So that becomes an issue there. It is also difficult to stay focused now when you work in home. Because you're also thinking about other things. It obviously gives you flexibility, but you're also thinking about other things. The biggest problem of home-based business is about the opportunity to expand, actually. Now, if you want to expand, you need more space, and obviously you need to move out of home. And working on yourself, it's also about managing your time. But again, it means it's also you're sacrificing your weekends, your time off, and all those things. So you need to be basically very disciplined to look into it. Now, if you want to start a home-based business as such, so we need to keep that in mind. Another way of doing it is an opportunity is purchasing an existing business. Okay, so that is another way to do it. There are some advantages as usual, and there are some disadvantages. Okay, the first advantage is going to be you can begin the trade immediately. If you buy something, say you're buying an existing restaurant, or you're buying an existing small food processing business, you have all the machineries and the processing plant, which means you can start it immediately. Okay, and it is also easy to arrange finance for these ventures. You can get into the finance, you can get easily convince the banks and other financial institutions. So it is easy sometimes because there is an established track record, customers, and there might be a brand as well. So which is easy. But this could be positive and this could be negative. If the business was really doing well, it is a positive. Which means they had a very good track record, they have a very good customer base, and their brand is known to everyone. If it is not that good, then possibly you need to think of rebranding, which is an option as well. What are the disadvantages? It is definitely less flexible than a startup. That is for true. Because you're buying an existing business. And number two is about difficult to establish a purchase price. Okay, How you are going to establish a purchase price? So I would encourage you to go to look at the commercial real estate web page in South Australia. Now, um, look for the business you are interested, no, the nature of the business you are interested, and see if it is available, no, maybe in the suburbs where you are, and then see how much they cost, no, what is the price of those particular businesses, no. So and it is a challenge actually. Now, how you are going to establish? Are you going to purely go by what they say, or you're going to do something else? Now, you have an answer in the next slide, but I'm going to. That's a question for you to think now. No, um, the third biggest disadvantage is you may inherit existing liabilities. See, some business do sell, no, when there is a loss, no, which means they have to repay the suppliers, they have to repay some to the bank. So you are buying with all that. So that is something as a disadvantage. So you need to be really look at it. So how you are going to establish a price? There are three methods of doing it. There is one way of doing is the market-based valuation. There is the second way is asset-based valuation, and the third is about earnings-based valuation. So there are three ways of doing it. No, but the basic question you have to ask is how much is this business worth? No, an understanding of a price is very important. No, which you can achieve that through market research, and then the best price is based upon two, the buyer's perspective and the seller's perspective. Now, and that is where exactly your negotiation skills is going to play in place now, and you derive on that particular price. Let's look at the first one. Okay, market based valuation. Okay, so what is the market rate? No, so this is basically done through the going market rate method. What you do is now, so you look at the selling price and you look at the selling price of similar firms basically. Okay, so that's one way of doing it. Now if you want to buy a small retail outlet, no, and then you look at it, what is the price of this retail outlet around it? There is also another way to do is, no, it's known as the revenue multiplier method. No, so you use a common industry multiply to calculate the purchase price. No, so this industry multiply is something you can obtain from the web pages. So and they are calculated basically. So what they do is they have the selling price is determined by the turnover and the standard industry multiply. So they do it. So that's a market based valuation. So if you look into most of the professional practice, like doctors, lawyers, accountants, those are the people basically use the revenue multiplier method. They look at how many clients they look at it, how many lawyers are there, and etc. and etc. So they basically look in those terms. Right. The next one is the asset-based valuation. So you look at the records. It's based upon the books. You you set the price based on examining the assets and liabilities. Okay, and what are the buildings worth? If they have vehicles, then you need to put depreciation. So selling price would be basically based on the tangible assets, but plus intangible assets minus liabilities. So when we talk about intangible assets, we are talking about goodwill. So things like that are very difficult, but again to quantify. But again, you need to include that into the selling price. So when you look at the books, you need to adjust the book value. Okay. You need to look at the true value of all assets and liabilities. Okay. Say for instance, if someone has purchased a building 20 years back, and then if the book value is going to be 20 years back, they purchased a building for $100,000. and today what would be the price. Obviously it is going to be appreciated. But there are also certain aspects like machineries, vehicles of a particular business. You look at it, so those particular those particular things will not appreciate, that will depreciate. So you need to look into it. And as I was emphasizing, um, the price will also be based on the firm's goodwill, right? So the third one is asset based valuation. Okay. um, so this, in this particular aspect, what they do is they sell the individual assets rather than continuing to operate on going concern. You know, they represent the bottom price. Basically, they look at the, see, under the liquidation value, what happens is some people, they buy a business not to run it. So what they do is they buy the business and then they want to break it up and then they want to sell it off. No? So that is something they do. So in that particular aspect, what they do is they try to break up all the assets and put a price on that. No? So maybe they will look at the bottom price. The next one within the asset based valuation is the replacement value. No? Uh, if in under the replacement value, the way they do is, now the cost of replacing all the firm's tangible asset at current market rate. Now if you have to change everything, what would be the market rates? So they look into that, and this will be basically represent the buyer's maximum price. Now here their buyer, because they would not look into the depreciation, what's happened to the business, the equipments and all those kind of thing. So that is the replacement value. They will say that, okay, these are the machineries in current price, this is what it's going to be, and they basically calculate it as such. So the third is earning based valuation. Now here you're going to purely look in terms of cash flow. They basically look at what is the future earning power. Now how much they can earn. So that's what they look at. And what is the ability of the business to produce cash income. Now, so those are the two things they look at. So this is basically calculated by net annual profit divided by ROI. ROI is nothing but return of investment. When there is a high level of risk, is going to lead to high revenue. No, so because of high risk, the price might be sometime low. No, and under this method, one thing you need to be cautious is the future income, whatever you are generating, cannot be guaranteed. No, for the simple reason, the market might change. There might be variation with the external environment. So those kind of things you need to really account for. So the next one is within earning based valuation is discounted cash flow. So this is a very complex analytical tool. What they do is, the way they do the valuation is the valuation of business minus the present value of estimated future cash flow. How much is the prospective cash worth in today's dollars? So those are the things they really calculate, and then they look at the future cash flow plus the terminal value. The effectiveness of this particular method of valuation is depending upon the realistic assumption you make, especially in terms of cash flow in the future, the terminal value. Now when we say terminal value, it's the value of the business after the forecasting period. So there are tendencies people might over calculate or under calculate, which you need to be really looking at it. What is the most appropriate way? Now we are looking at all different ways. The most appropriate method to use is to often a subjective decision and also looking at the industry specific trends. These are the things you need to really consider when you want to buy the business. So very important. Before you buy the business, there are certain questions you want to ask. okay, to whoever is selling. Now, number one would be the reason for sale. Now, why they want to sell? Now, um, existing stuff. Now, are they continuing or they're leaving? Now, how much leave they have? What is the current liabilities? Transferability of license and permits. Can say transfer the license. Can they transfer the intellectual property and intangible assets? No. So when we say intangible assets, we are talking about simple things like brand, the logo, no, the name. Can they give all that to you? No. And is there any leases, stocks, and assets coming with the business? So these things you need to be really looking at. Now, when you want to buy something, now even if they say the business is going to be $300,000, no, you need to always include about the legal fees, the accountant fees, the valuation cost, government taxes, bank fees. So these all will top up with the actual price now of the business, which you need to be really aware of. Okay, so buying a business is one option, and then we looked into all different ways of evaluating the price and what you need to be considered. The next option is about the franchisee. Now, franchisee is basically an arrangement, no, where the producer or the owner of the business product, no, or operating system permits another business to sell these goods and or to use the business operation system basically. So they develop the business operation system and they sell it. They allow you to use it. A very good example is McDonald's and other fast food chains where franchising is in lead. Now it has been really popular for the last 30 years, and you would see a lot in addition to the fast foods. You would see in petrol retailing, you would see them in distribution, professional service, and also retail sales. Now, as far as in 2012, there are 1,200 franchisee system in Australia, so which is really amazing. So there are two people involved here: the franchisor, the one who owns the rights, the franchisee who operates the system or sells the product under the contract and license from the franchisor. So what is the nature of franchising basically? Now, it is basically a license agreement. Now, and one thing here it's very important is it typically has a lower failure rates than new startups. Now, the risk is low, okay? And especially they are very good for small business owners seeking security, okay? And it is less suitable for entrepreneurial types. The simple reason is, entrepreneurs want to be innovative, and unfortunately, franchisee gives less flexibility to be innovative and do something totally different. There are two different types of franchisees. One is a product franchisee. It's just to sell goods and services. It is more like a distribution mechanism. There is also something known as a business system franchisee, where the franchisor supplies the product and the detailed guidelines about how to run the business, basically. Now, so the process and operations have been already been pre-tested by the franchisor. That's very important, right? So there are some advantages in franchising. Now, I'll just like to highlight here. The business owner does not need to develop anything. That's the biggest advantage. Number two is less time is wasted. The products and services are well established. There is a continuing training and support. The raw material cost is low. It is really low. The reason is it has been centralizedly procured and distributed, and raising capital could be easy. So those are the reasons. However, there are some disadvantages and challenges as well. It's more expensive, and you would have to share a proportion of your profit to your franchisor. And there is always a restriction with the geography area. So it is not very easy, even if you have money, it's not easy to get franchisee in the place where you want to be, because the franchisor need to approve that. No, you need to comply with the franchisor's direction. Now, whatever the changes they bring in, you need to comply with. No, and there is a very limited duration of, I would not say very, but there is a limited duration of the franchisee agreement. So it cannot be, it is not a one-time agreement, and it can it will have a time on that to go. Okay, once you have decided to you want to go into the business, now how you are going to go into the business? So there are certain steps to go in, right? The process now. So you start with the market research now, and you check about the various requirements, access resources, buy, start or franchising, perform financial projections, and write a business plan basically. So these are some of the things you will be doing now as such, right? So let me walk through one after the other in detail. What is market research? Now, this is one of the very common problem faced by entrepreneurs, is a lack of information and relating to their business ideas. Very important. Now, so the lack of research can also create less obvious barriers to business survival and growth. Now, if you haven't really understood what is the business, now then obviously it is not going to go too far. So what you're going to really research about, you're going to research about the competitors, you're going to research about the industry trends. Is it going to be profitable or low profitable? You're going to look into customer base. Now, you're going to look at the products and pricing. Now, so these are the basic things people would really do about the market research. Now, so this basically highlights what I told you. Now, again, so what to research, we touched upon it. No? What to research in terms of the industry. Now you look at in terms of how the industry is moving. Is it going to be profitable? No, is the future is profitable? So those kind of aspects. You look at the macro environment as well. No, when we say macro environment, you're really talking about the political, economical, social, legal, environmental, and technology-oriented environment. We call it as PESTEL. So you look into that. When you want to do a research, especially if it's going to be a small business, there are a few constraints. So number one is about the cost. So if you're going to go to a consultant, research is going to be very expensive, right? If you want to do it by yourself, time is going to be a constraint. Research experience is again a very important aspect. Now, are you going to do research with a primary data collection, or you're going to do a research with the secondary data? Now, where you can get the reliable data, that's again an important aspect. Now, personal prejudice. Now, people might have their own thinking which is stopping. Uniqueness. Now, uniqueness in terms of the analysis you're going to use, uniqueness in terms of the industry itself. So those are some of the constraints of the research, and that's the reason if you have money, it's always advisable to use a consultant who has knowledge about that particular business, and then he can give you quickly about the trends and all those kind of things. So how to conduct a research? So you do sometimes on the secondary information, as I was telling you. It's a desk-based research, and sometimes you do it on the primary information as well. On a very first hand. Say in our assessment, there are two important assessments. One is the interview with an entrepreneur. So that is a primary data collection. You're going to meet an entrepreneur, you're sitting face to face. Now you're getting the first-hand information about the entrepreneurship process, the creative innovation and strategy. Okay. The secondary information is for your second big assessment, the feasibility study. In that particular case, you will not have time, or you're not allowed technically to collect first-hand information. Everything is going to be on the second hand. As secondary information basically, and where you would get data from the existing reports, the internet, credible sources from the internet, and all those kind of places. You can get the secondary data from all these places, especially publications. Industry association is a very good aspect. Australian Bureau of Statistics is a great place for you to look into it now for data. These are some of the primary research, and the general issues you need to consider when it comes to research. Now it's about the sample. How many people are you going to survey if you decide to go for a survey? No, if you're going to go for a quick interview, how many of you are you going to get it? No, how is going to be the response rate, the reliability and the validity? No, based based on that, can you say that now if you're going to collect data from 100 customers, now can you generalize and they say that no, this is appropriate, no, this is what we found and it's going to be applying and etc. Market research and strategy. So it is generally used to determine the feasibility of a new startup business. So this is exactly you're doing in your assessment 4. Now, so this information will help to forecast likely the future events and provide a foundation to develop a strategy, no, which is very important. When we say develop a strategy, we need to definitely look at how you're going to formulate a strategy. That is the final part of the lecture. What is a strategy? No, so one of the definition it says it's a long run goal, no, and objectives, adoption of of an enterprise and the adoption of course of action, and the allocation of resources necessary for carrying out these goals. No, this is what is strategy. But here there are certain important aspects, and the most important aspect, the first one I underlined here, when you say a long run goal, how long? That is a question you need to think about. How long is the long run goal? Okay, so you need to define that. I'm not going to spend too much time. No, the long run goal would be for traditional industries, it's going to be 5 to 10 years. But in most of the cases, it's going to be 3 to 5 years. Now, you need to keep that in mind. Now, but again, it depends on the industry where you're going to look at. So this is the very basic strategic framework. If you want to develop a strategy, you have the firm and you have the industry environment. Within the firm, you have your goals and values. Now, each organization has their own mission, vision, and values, what they want to achieve. The next aspect they have is about the resources and capabilities. Now, every organization have their own resources and their own capabilities. The structure and the system of that particular organization. Now, some organization will be team-based structure. Increasingly, that's the trend we see. Some organizations we see it's a hierarchy kind of a structure. Okay, so this is all within the firm. The other side, you have the industry environment. Now, where you have your competitors. These are 3 important people. Now, so if you want to copy what your competitors are doing, you don't need to have a strategy. Okay, if you want to if you want to succeed, no, if you want to beat your competitors, then you need to have a strategy. That's very important. So you need to understand them. Your customers, no, you're creating value for whom? You're creating value for your customers. So you need to look into them. And the suppliers. So the suppliers determine the quality of product and service you're going to produce. So you have the firm, you have the industry. So you need to develop which fits into do. So linking this firm and the environment is how you develop a strategy. And this strategy cannot be a very rigid one, because in today's business environment, things are frequently changing. New things come up now. So you can't rigidly say, I'm going to do only this. No, I'm not going to do this. Okay, you need to be having that, but at the same time, you need to be flexible, because you don't know what's going to be in the future. A lot of big organizations failed because it's not about they didn't have the right strategy, but it's about they didn't have the fit. Now, so that's very, very important now when we look into the strategy. So there are different perspectives. One perspective is about the market-led perspective. Now, how do firms gain competitive advantage? Now, so before that, you need to look at what is competitive advantage. Competitive advantage is about how So competitive advantage is about when two or more firms compete within the same market, one firm possesses a competitive advantage over its rivals when it earns or has a potential to earn persistently a higher rate of profit. Okay, so that's what is competitive advantage. And if you can sustain that for a long time, then we can say it is a sustainable competitive advantage. No, the changes within an industry will determine uh, which markets the business venture should enter, where it should stay in, whether it should stay or it should exit, and all those kind of things. SWOT analysis is one very basic tool for you to understand the strategy, how it is going to work for the organization, to analyze the internal and external. You can look into the strengths and weaknesses is considered to be the internal, the opportunities and threats are going to be the external. But however, keep in mind, this is a very, very basic tool in strategic management, but there are more complex analytical tools to look into it. So what are the strategies you can come up with? At organization level, there are very generic strategies. Now, they call it as generic because it can apply to any industry. One is cost leadership. This particular strategy emphasizes on efficiency. High volumes of standardized products or services. Say, for example, low-cost airlines. So they achieve that through cost leadership. Number two is about differentiation. This strategy involves creating a product that is perceived as really unique. These are something like luxury brands, high-end brands where it is really unique. It's differentiated, kind of a thing. And finally, the focus. Okay, so focus could be both cost leadership and differentiation, but you're focusing on one particular segment. And as said, say for instance, you're focusing on a product purely on the needs of elders. Now you're focusing on a particular product based on differentiation only for infants. So those are kind of the generic strategy you would look into it. There is a resource-based perspective which says that why some firms are successful. The reason they give is the firms are successful because they have the right resources for them to operate. So they should assemble and they deploy the appropriate resources which will help them to attain a sustainable competitive advantage. Okay, so, and here I have a little chart for you to understand how you can price the resources, especially the tangible, the intangible, and the human resources, what characteristics you need to look at it, and what kind of indicators you can look in for. Okay, and you can also look at the attributes of strategic resources now and how to sustain the competitive advantage through various analysis. One analysis is VR IO. Now it says, is it valuable, is it rare, is it difficult to imitate, and can you organize the resources? Now is it difficult to know how you can organize all those resources together? How do you develop a business model now? You have the business model and you have the strategy. They both are linked, but they're yet still a very distinct concept. So the business model is a conceptual tool describing the elements and the relationships that outline how a company creates the market value. So there is a flow chart with which I'm going to end the lecture. So this is where you look at the firm and where you have the core resources and competencies, and you're going to partner with the network and the key processes, which is going to have an influence in terms of the cost structure and the margin model. These aspects create a value proposition leading to customer relationship and distribution channel, and finally leading to the target customer. So if you look into this model, in this model there are three important aspects. Now number one is about how you're going to create value to the customers. No, um, when we say value, it's about what they pay for, what the customers pay for, and what's the value they get out of it. No, so you need to really understand the target customers, the segments. No, the customers, what they want to, the company, what they wants to offer for the customers, for the money they pay, the value. Number two is about the distribution channel. No, so how the various through various means the company can get in touch with the customers. Now these days it's very easy because you can do it through online. Now, and which could be very personalized, and it could be done through smartphones where you can reach the customers. There is a platform which is known as O2O. It's similar to e-commerce, which says online to offline. Basically, you click things online and then it goes to the offline. So you can look into it. And the third final one is the customer relationship. What is the kind of relationship? No, the company establishes between itself and its different customer segments, basically. So that is something you need to really look at it now, and how you can do it now, especially in terms of, say, how you're going to sell it now, how you're going to do the after sales service now, how you're going to get feedback from the customers now, how you're going to retain them now, because customers could be an excellent source of promotion of your product or service through word of mouth. So those aspects you need to really look at it now. The second most important thing in terms of value creation process is now how the infrastructure of the firm is helping out there. So that is very, very, this will purely determine the profit for that particular business. So when you have a business model, no, there are number of uses. Number one, the primary use is it helps for you to understand your business clearly. No, you have you will have clarity, and once you have the clarity and once you have the business model, you can share it with anyone. Number two, the advantage is about the use. I would say is analyze. No, and you can definitely, when you have a model, you can analyze the logic of the company, no, and you can use that as a tool for your measurement, no, and how the business is performing. Number three, it's about the managing, no. It when you have a business model, it improves the management of the business logic of the firm. Now, it helps in terms of designing, it helps in terms of planning, no, etc. And it also looks in terms of the prospect. Okay, you can look into the future, how the company is going to contribute. No, it can help to foster innovation. No, it will increase for your readiness for the future. No, and all those kind of things will help. So I'm going to stop it today here. We already went over by 12 minutes. Than the usual lecture time in this online lecture, due to we need to cover a few things. These are some of the summaries we did today, and I'll see you all in lecture in week 6. The most important announcement in week 6 is we are going to have a guest speaker. Thank you.